Hey everybody, it's Pete. Welcome to Stock Trading Pro. In today's trading education, we're going to talk about short selling. The stock market crash is intensifying to the downside. A lot of people are afraid right now, and they're saying there's no opportunity. That is completely not true. When you understand the short side of the market, otherwise known as short selling, there is a ton of opportunity. I'm going to show you exactly how to do it, how to short sell, how to enter trades for short sales, how to get out of short sales if they move in your favor, how to get out of short sales if they move against you, how to spot the opportunities, and I'm going to give you a bunch of examples. This is definitely a video that you're going to want to watch more than one time because with the stock market crash right now, there's going to be plenty of opportunity on the short side of the market. Enjoy the video, click the link below, make sure you subscribe, and if you have any questions, definitely leave a comment below. I'll get back to you as soon as I can. Have an awesome day.
All right, so let me clarify what I said this morning about getting out can be tricky. I wasn't implying get out can be tricky based on the price action. I meant getting out can be tricky because you don't understand how. Very, very big difference. Very, very big difference. I'm talking about when you buy a stock and it's going down, you understand I'm going to hit the bid, I'm going to actively get out of the thing. When you short a stock and it's going up against you, it messes with your mind that it's going up and I have to buy it back. And do I buy it? Do I try and advertise on the bid? Do I buy it at the offer? I'm telling you, when I said tricky, I didn't mean the market conditions. I meant that it's hard to understand how to do unless you've done it. But breaking down, looking at intraday shorts, it's really the same criteria that we, where's my charts? I lost my charts. Where are they? Is it here? I got too many windows open. Here it is. So Lynn, if I was looking at this now, obviously on the short side, we could use NEO as an example because that was one of the top short sales coming into today. So you obviously, as we mentioned today, you have the opening price, and then you have the each opening hour, the opening price for each opening hour. So this is obviously the opening hour. So that's still short sell opportunity. If you have the opening price and it's below VWAP, got good shorting criteria here all the way up until 12:30. Then you bring it over into the hour. So this here and right there is the next hour. So at this moment right here, this is the new hour opening price. This is where it started. And let me actually just zoom this on over. We'll bring this over to the next hour, which is right there at 11:30. So this hour, so Lynn, just to be as clear as possible, specifically talking about day trades, it's below the opening price. This is the opening price for this hour. Right here, it traded above the opening price and the market was bouncing, but it hit VWAP resistance. So VWAP came in, went below the opening price here and was below the opening price. And so below the open, below VWAP and below that hour, you could have short here. So now we move out to the next hour and we're going to bring this over right there. So this is the new hour. So right there. So if you shorted it here when it got below the open and the next hour started, now this next hour is red. There's the opening price. This entire hour, it's below this hour's opening price, below VWAP and below the opening price. So you have one reference point, two reference points, three reference points. Now the next hour unfolds and we go out. This is where the market bottoms and we go over here to 1:30. And now we go to this current hour. Now things change a little bit. Now we're still looking at NEO short because it's been a short for the first 3 hours of the day. Now we're above this open. This is the new hour. This is the 12:30 opening price. We're above here for this entire hour. We're still below VWAP and still well below the opening price. So now you have conflict. Do you trade this rally with the market bouncing strong because this hour is positive, or do you wait for the next hour to unfold and look for a short sale opportunity, which let's say now goes from 1:30 to 2:30. And right there is the opening price. So here's an interesting scenario. And I think this is a pretty fun one to talk about. And we'll finish up the short selling on this. Think about what you have here. Right now, this is the new hour. This is the 12:30 to 1:30 hour. You have VWAP resistance. You have the opening hour this hour's resistance. So you got right here is the opening price. Right here is VWAP rejecting it, shoving the stock down. Right there is a pretty darn good short sale. You're below the day's opening price. You're below VWAP and you're below the current hour right here, which this is the opening price. Right there is a good short sale. Every reason in the world to short sell it, unless you think the market's screaming and you're just not putting on a short at that point. This is a great example here of a great idea that probably would not have made money. Everybody understand that? You have all the reason in the world to look for a short sale here, and it broke down, and you probably would have put the short on, but it bounced. That's a good idea that probably would have either taken a flat or a small loss. Do you have a profit maximizer for short sales? Yeah, same exact one as the other one. You're just using it on the other side of the market. Same exact thing. Whether you're using a momentum profit maximizer or a momentum profit maximizer, it's the same thing on the other side. So if we're looking at it here, if it closes on the opposite side above the 10-period moving average, it's the same thing as the one on the other side. Exactly the same thing, but you reverse the close. It's on above it instead of below it. Let's see. I meant tricky because sometimes discussions come up about buying at the offer, selling at the ask. Didn't know if that was a bid-ask situation to navigate when short selling in regards to bid and ask. Well, buying at the ask, selling at the ask. Yeah, that's the confusing part about it. That's the confusing part. So let's actually just, let me find the notepad here. Okay. So let's talk about short selling. Just to, you can sell short on the ask. You can sell short by hitting the bid. Those are two different ways to get short. So in this instance here, you're advertising on the ask or the offer, depending on what you want to call it, it's the same thing. You're selling short by advertising on the offer. So let's just say, for argument's sake, a stock is 35 on the bid by 35.05 on the offer. We'll just keep this simple, right? So let's say you want to sell short and you try and advertise. You're going to advertise on the offer at 35.05 because that's the offer price. You're going to see if somebody will sell it to you to sell it short. If you really want to sell it short and this thing starts going down, like this starts to happen right here, right? You can either lower your offer or actively sell short by hitting the bid, which in this case here would mean that you would lower your price to a limit order of 35 or better and actively hit the bid. So hitting the bid means you are actively selling. So if it was the other side, if you bought and sold that way, that would be your stop loss, right? You'd be exiting out. Now, here's where it gets tricky. Let's say, for argument's sake, you sold short at 35.05. Let's just stick with that number, right? How do you get out? What do you want to have happen, and how do you get out? Well, obviously, you want it to go down, right? That's the area. You want it to go down from 35.05, let's say, to 34. Just use 34 as an example, right? Which actually happened today. There's probably a good example here in NEO because that's actually what happened. So that's obvious. So as it's going down, you would do what's called cover at the bid, which equals advertising to buy stock on the bid. So now at this point, let's say you want to cover it and it's at 35. So now the bid ask is probably 34 by 34.05. So in a perfect world, this thing is going down. You advertise to buy stock, which the proper terminology is covering, but you're actually advertising to buy at 35. So it went from 35.05, it's going down. You're like, yeah, it's going down. You advertise to buy, perfect world, you're out. But everybody else sees the same exact thing. Your advertisement at 35, now all of a sudden it starts to move higher. Now it's 35.05 by 35.10. You try and advertise 35.05 again, and now it's a big green candle forming, and that's going higher. It's going higher. It's going higher. You're not going to get filled advertising on the bid anymore. Now you have to get out by taking the shares at the offer, which means now in this case, let's say it starts to go up a little bit faster, and now it's 35.25 by 35.30. And you know you're not going to be able to advertise to get out. So now you have to actively get out of this trade. So it's going, let me actually put this above here because now it's going up, right? You have to now, instead of advertising on the bid, hoping somebody hits you, you have to now actively buy shares at the offer to get out of the position. That's the confusing part. When it moves down in your favor, you can sit back and be like, yeah, I'm just going to buy and get out of this thing, hit the road, go get a coffee. It's when it starts to spike down and you get this candlestick right here. We're like, uh-oh, I tried advertising down here and I couldn't get out. And now that big green candle and another candle and another, and I got to figure out how the heck I'm getting out of this thing because I keep advertising, nobody's hitting me. You have to actively get out on the other side. That's what I meant when I said it can be confusing or tricky because you're not selling at the ask at this point. And this is really the biggest point I want to get across. You're buying at the offer in this case. You're buying at the offer at 35.30 as the thing's moving up against you. Now, does everybody understand why I keep saying you need to take a legal pad and write down what happens if I sell short? I can sell short on the offer, or I can sell short by hitting the bid. If it moves down, I can advertise on the bid to get out of the trade by covering the stock. If it goes up, I have to now buy at the offer to get out of the trade because it's now moving against the direction that I want it to go. So when I say short selling needs to be learned, that's really what I'm talking about. How to get out of the positions and how to get into the positions, not the fact that we're identifying whether or not it's a short sale opportunity, although hopefully that helped quite a bit as well. What I just showed you is a pretty clean explanation of getting in and getting out of short sale. But this is the answer here, is when it starts to move against you, you can no longer advertise on the bid because it's not going down anymore. Why would somebody sell it to you down here if the thing's going up? You have to now go and get it from somebody else who's advertising it. You have to buy it from somebody else who's advertising it. I'm not exaggerating, and I say this in all earnest honesty. When I first started trading, this was one of the most confusing things to me, and I had to learn it because the market was going down every day. But I eventually learned it with a legal pad and said, okay, how do I get short? How do I short sell mechanically? I can advertise by advertising on the offer, or if it starts to go down, I have to actively sell short by hitting the bid, which in this case is 35. If it goes down, I can cover at the bid because prices are still going down, going down, going down, going down. Put your bid in there, boom, you get hit on the way down. If you advertise at the exact spot and it starts to rally, now you have to buy at the offer as the thing is rallying. Please watch that section of the video one more time, two more times, take notes, and then come back to a follow-up or ask me during Discord during the day. And obviously that would be a really cool opportunity for us to discuss that while it's unfolding. I'm telling you, as an experienced trader, this was one of the mechanics of short selling, getting in and getting out. If it moves in your favor, it moves against you. The mechanics of it is what we need to wrap our head around, not what short selling means.